Imagine a company, maybe not one you hear about every day, quietly dominating a really critical, multi-billion-dollar market. A company that's just so good at what it does, its customers aren't just happy, they're practically lining up to stay with them, even when these huge industrial giants are looming large.
A real David and Goliath scenario playing out in healthcare tech.
Today, we're taking a deep dive into Sectra AB. They're a fascinating Swedish technology company operating right at this interesting intersection of medical imaging, IT, and, well, high-stakes cybersecurity.
Right.
You've sent us a whole stack of investment analyses, research papers, company reports. There's a lot here to unpack, especially about how a smaller player gets to be a leader.
Indeed. And our mission for you today is really to pull out the most important nuggets of knowledge from all this material. Looks, well, not just what Sectra does, but crucially, how they've managed to navigate this really intense competition from much larger players. Exactly. We'll dissect their pretty bold strategic shift to a cloud-based subscription model, and maybe most importantly, we'll try to uncover what their, frankly, unparalleled customer satisfaction really means for their long-term success.
And maybe what lessons we can learn about market leadership, too.
Absolutely. We want you to walk away with a really clear understanding of what makes this company tick.
So, okay, to really get Sectra, we need to understand it's not just one thing, is it? It feels more like a company with two powerful engines. Interconnected, but distinct.
That's a great way to put it. Exactly right. When you look at their operations, the sources clearly show two main segments.
Right.
The first, and this is by far their main engine for revenue and profit, is called Imaging IT Solutions.
Okay.
This is where they build that powerful, really mission-critical software that hospitals all over the world rely on for diagnostics.
Core healthcare stuff.
Yeah, core healthcare stuff. Then there's secure communications.
Yeah.
Now, this is a much smaller segment if you look at revenue, but it's absolutely critical to their brand identity.
And their history. Right.
Deeply rooted in their history, yeah. And it gives them a really unique competitive edge, as we'll see.
All right, let's start with the big one then. Imaging IT Solutions. This is where they really make their mark in healthcare. Managing all those patient images, the data, sounds like the digital backbone of a hospital's diagnostics.
That's a perfect description. For the fiscal year 2020-2023 alone, this segment brought in a substantial SEK, $2,079.0 million in revenue for Sectra.
Wow.
And their entire suite of offerings here, it's meticulously designed to do two main things for hospitals. First, streamline diagnostic efficiency for doctors. Make their workflow faster, more accurate.
Makes sense.
Second, significantly improve collaboration among clinical teams. Make sure everyone has access to the same critical patient information when they need it.
Crucial.
And the core products you'll hear mentioned most often in this space are what they call PayCS and VNA.
Okay, PayCS and VNA. Let's break those down. Sectra PayCS, that's their picture archiving and communication system. It's consistently rated market leading, especially in radiology. But, every company says that. What's the real difference? What actually makes it stand out?
That's a great question, and it really gets to the heart of why they win. Our sources consistently highlight several key factors. Firstly, its sheer stability.
Stability.
Yeah, it might sound boring, but it's massive. Think about it in a hospital. Radiologists rely on these systems for critical diagnoses. Downtime isn't just an inconvenience. It can have serious, even catastrophic consequences for patient care.
Right, it has to work. Always.
Always. Sectra system is built for that mission-critical reliability, and their track record shows it. It delivers that peace of mind.
Okay, so stability is number one. What else?
Secondly, it's known for its ease of use. Again, might sound minor, but for busy clinicians under pressure needing to quickly access and report on images, an intuitive interface saves invaluable time. It reduces cognitive load, minimizes errors.
Less click and...
Exactly. Our sources mention this repeatedly. What's more, the system is designed to consolidate most of a radiologist's workflow into a single application.
Okay, so they're not jumping between different programs.
Right. Less context switching, more focus on the actual image. And it's not just for radiology anymore. The platform is strategically expanding. It now supports specialties like cardiology, ophthalmology, orthopedics.
The ologies?
Yeah, the ologies. And this reflects a bigger trend in healthcare towards enterprise-wide imaging, getting all patient images, regardless of type or origin, into one central system.
Okay, so reliability, simplicity, consolidation. Got it. Then there's the VNA, the Vendor Neutral Archive. The name suggests it doesn't care who made the scanner, like a master key for image data.
It really is, and you nailed the critical part, vendor neutral. That's key. Hospitals, especially big ones, often end up with this mix of different imaging systems over time.
From different mergers or departments buying their own thing.
Exactly. Radiology might use vendor A, orthopedics vendor B from an old acquisition, cardiology vendor C. It creates headaches, data silos, difficulty sharing.
And fragmented patient records.
Critically, yes, fragmented imaging history. The Sectra VNA acts as that central multi-departmental library. It can store, manage, and integrate all this diverse imaging data, no matter which vendor's machine created it.
Interoperability.
That's the goal. So any clinician can access a complete, unified patient imaging history. Think about a patient scanned years ago at one place, then today somewhere else. The VNA brings it all together.
Which is vital for diagnosis, right? Seeing the whole picture.
Absolutely crucial. Prevents misinformation, allows better treatment planning. It's like that universal library for all visual medical info.
But they're not just sticking with traditional imaging, are they? I see digital pathology mentioned as a major growth area. What's the big deal about digitizing pathology? Seems like a huge shift from microscopes.
It is a huge shift, and it's a really exciting, key strategic growth area for Sectra. It's potentially transformative, especially for cancer care.
How so?
Well, historically, pathologists used traditional microscopes, looking at physical glass slides. Digital pathology replaces that with high-resolution digital slide viewers. Pathologists look at incredibly detailed digital images on screen.
So no more glass slides under a microscope?
Increasingly, yes. And this opens up huge possibilities. It enables much more efficient collaboration. Specialists across different locations can review complex cases together instantly.
Remote consultations, too.
Definitely. Critical with specialist shortages. And crucially, it opens the door for AI-powered diagnostic tools.
Ah, the AI angle.
Yeah. AI algorithms can help identify abnormal cells faster, quantify tumor characteristics more precisely, maybe even spot things a human eye might miss. Ultimately, it aims to improve both the speed and the accuracy of cancer diagnoses, vital for patient outcomes.
And looking even further out, genomics IT. That sounds really futuristic, integrating genetic data right alongside images.
It does feel that way, doesn't it? It's still early days in terms of market adoption, but strategically, it's very important for Sectra. It's a bold vision. They've already launched a genomics module that integrates genomic data right into their main enterprise imaging platform.
So a doctor sees the scan, the pathology slide image, and the genetic info all at once.
That's the idea. Imagine seeing a detailed tumor scan, the microscopic tissue view, and the specific genetic markers for that cancer type all integrated. Sectra calls this integrated diagnostics.
These integrated diagnostics.
They see it as a key future differentiator, especially for precision medicine and oncology, where tailoring treatments based on genetic makeup is becoming central. It's about giving doctors that truly holistic, multidimensional view.
So imaging is clearly the big revenue driver, but Sectra actually started in security, didn't they? The name Sectra Secure Transmission.
That's right. It's core to their DNA. Yes, Sectra stands for Secure Transmission. That segment, Secure Communications, is much smaller, about SEK 234.5 million revenue in FY 22-23, but it's incredibly specialized, high margin too.
What do they actually do there?
They develop high-assurance encryption systems, secure communication solutions, for really sensitive organizations, government authorities, defense departments, critical infrastructure operators, mainly in Europe.
So serious stuff.
Very serious. Products like their Sectra Tigers are approved for protecting classified information up to the secret level. That tells you the level of security and trust involved. This isn't your standard enterprise security.
Okay, that's top-level security. But how does that connect back to their healthcare business? They seem like such different worlds.
It provides what our sources call a significant brand halo. And that's incredibly valuable in healthcare.
A brand halo? How?
Well, think about healthcare. Patient data privacy is absolutely paramount. Regulations like IPR in the U.S. are super strict. Hospitals are prime targets for cyber attacks.
Right. Data breaches are a nightmare for them.
Exactly. So knowing your imaging IT vendor has a deep, proven background in securing top-secret government communications, that adds this inherent layer of credibility and trust.
Ah, I see. It signals competence in data protection.
Precisely. Few generalist competitors can match that specific heritage. It resonates hugely with hospital IT and security teams.
Okay, so we've got this dual-engine business model. Now, you mentioned a huge strategic shift happening, not just new products, but how they sell them. This big move to a subscription model. That's fundamental.
Absolutely fundamental. This isn't a minor tweak. It's a deliberate core transformation of the entire business model. Sectra is actively moving away from the traditional perpetual license model.
Where you buy the software once, up front.
Right. Buy it and own it indefinitely. They're shifting to a cloud-based software as a service, or SaaS, subscription model. And this whole strategy is embodied in their main offering, Sectra One.
Sectra One.
It's not just following a trend, they see it as strategically vital for long-term growth and customer value.
So instead of hospitals making a big one-time capital expenditure, they now essentially rent the software with recurring fees, maybe tied to usage.
Precisely. Under Sectra One, customers get access to the whole enterprise imaging portfolio, but they pay a recurring fee. And yes, that fee is often tied to usage metrics, like the number of exams performed or maybe the number of users.
That must have huge financial implications. Changes how revenue is recognized completely.
Profound implications. And crucially, it radically changes how you should interpret their reported numbers. That's a key insight if you're trying to understand their real performance.
Okay, here's where it gets really interesting and frankly a bit confusing sometimes. Our sources say this transition temporarily dampens reported revenue and profit growth, makes the numbers look less impressive short-term, even if the business is actually stronger. How does that work?
That's a critical point, and it often tricks people up, analyzing companies making this shift. It's where accounting needs strategy. Under the old license model, a big chunk, sometimes most, of a contract's total value was recognized as revenue up front, often right when the deal was signed.
Big initial splash.
Big splash. But under a SaaS model, that same total economic value isn't booked up front. Instead, it's spread out, recognized in smaller bits over the entire multi-year subscription period.
Ah, okay. So smaller increments over a longer time.
Exactly. So let's say Sectra signs a massive, economically more valuable SaaS contract, one that's better long-term. Its reported revenue growth can actually appear to slow down in the short term compared to the old model.
Even though they just signed a bigger deal.
Even though they signed a bigger deal. And this also pressures the reported operating margins near term, because Sectra has to invest heavily in cloud infrastructure and delivery capacity before the full revenue from these long-term contracts gets recognized.
So costs come first, revenue recognition lags.
Precisely. It's a classic case of short-term accounting impacts for long-term strategic gain. Traditional accounting can actually mask the underlying strength during this transition. It's like watching a rocket just lifting off seems slow, but immense thrust is building.
So it's like an investment, really. The pain on the income statement today is buying them a much more valuable, predictable revenue stream tomorrow. Is that the way to see it?
That's exactly the right way to think about it.
Which means you really have to look beyond the surface-level revenue figures to grasp the true business momentum.
You absolutely do.
So how do we measure the success of this transition then? If the headline revenue figures are potentially misleading for a while, what are the key metrics we should be watching?
The key is to look at metrics reflecting the underlying business activity and, crucially, the future revenue streams being locked in. The most important one here is cloud recurring revenue, or CRR.
CRR.
And it's growing exceptionally fast. Our sources say for fiscal year 2024-2025, CRR surged by a remarkable 48.9%.
Wow, nearly 50%.
And the year before, FY 23-24, it was up an even more stunning 55.9%. That's not just growth. It's accelerating growth in their most valuable revenue type.
Okay, that's a strong signal.
Definitely. And looking broader, total recurring revenue cloud plus traditional maintenance grew by a strong 19.9% in FY 25 to reach SEK 2,067.4 million. And crucially, this now makes up 63.8% of their total net sales.
Over 60%.
Yeah. It clearly shows that successful shift towards stable, predictable income. They're building a much more robust financial foundation.
That shift is substantial. Where is this transition most advanced? Which markets are embracing the SaaS model most readily?
It's definitely most advanced in the North American market, particularly the U.S.
Okay.
There, nearly all new customer agreements they're signing now are for these cloud-based SaaS solutions.
So the U.S. market is leading the charge.
It seems so. It suggests the market, often a bellwether for healthcare tech adoption, is strongly embracing the model, and Sectra is successfully leading that change. Customers are ready.
Okay, we've talked about who Sectra is, how they're strategically changing their business model, but here's where it gets really fascinating for me. They operate in a space with absolute giants. GE Healthcare, Siemens Healthineers, Philips. How does a relatively small Swedish company not just survive, but actually thrive and win against these titans?
That's the million-dollar question, isn't it? Or maybe billion-dollar. Given the market size, it's a fantastic case study in niche leadership.
Right.
they are up against these massive diversified conglomerates, companies with huge resources, brand recognition, global reach. Yet Sectra has built this remarkably durable economic moat.
An economic moat, that sustainable competitive advantage.
Exactly. The thing that protects their business and lets them keep winning, like a fortress around their castle.
Before we dig into the moat itself, let's set the stage. How big are these markets? Medical imaging, healthcare IT, what's the prize they're fighting for?
The stage is enormous, and it's growing. That provides significant tailwinds. The global medical imaging market, overall equipment, software, services, it's valued at over $40 billion US.
40 billion.
Wow, and it's growing at a compound annual growth rate, CAGR, about 5–7% through 2030. More specifically, the submarket Sectra targets VNA and PCS systems that's forecast to grow even faster. Around 9% CAGR, expected to reach $11 billion by 2034.
So a big growing pie, and they're aiming for a bigger slice.
Precisely.
What are the big drivers behind this growth? Why is medical imaging expanding so consistently?
Several powerful long-term trends are fueling it. First, demographics. An aging global population, plus rising chronic diseases like cancer, heart disease. It just means more diagnostic imaging procedures are needed.
More scans.
More scans, simple as that. Second, healthcare providers are under intense pressure for digital transformation. They need efficiency gains, they need to consolidate all that disparate data, improve outcomes. Moving to unified platforms like Sectra's is key.
Right.
And third, there's significant technological disruption. Artificial intelligence, AI, is huge here. It's being rapidly integrated to automate analysis, improve accuracy, even reduce radiologist burnout.
AI in imaging is winning.
Massively. Forecast to grow over 27% CAGR. Alongside AI, cloud computing is becoming dominant. Offers scalability, remote access, less IT burden for hospitals.
And the cybersecurity segment also growing.
Absolutely. The market for securing critical infrastructure, where Sectra's secure communications plays, is also seeing robust growth, driven by more sophisticated cyber attacks targeting essential services.
Energy, finance, healthcare.
Exactly. Plus, heightened geopolitical tensions mean governments and organizations are investing more in advanced protection. So both of Sectra's engines are in favorable, growing markets.
So who are these giants Sectra is directly competing against in imaging IT? You mentioned the big names.
Yeah, their primary competitors are really the household names of healthcare technology. GE Healthcare, Siemens Healthineers, and Philips, those diversified industrial conglomerates.
Right.
You also have other significant players like Fujifilm and Agfa Healthcare. The key thing for this David versus Goliath story is that Sectra is significantly smaller in overall revenue and workforce. They're a focused specialist playing against global behemoths.
Makes their success even more striking.
It really does.
But despite that huge size difference, they're winning. How do we actually know? What's the objective proof beyond just anecdotes?
This is where independent third-party analysis is crucial, particularly from a firm called KLAS Research. They provide unbiased data straight from customers.
Okay, what does KLAS say?
Well, a 2023 KLAS report looked at 90 recent PCS purchase decisions in the U.S. It found Sectra was the most considered and most selected vendor.
Most selected? More than GE or Siemens?
More than anyone else in that study. And more recent KLAS data, covering procurements from Jan 2023 to Jan 2025, reinforces this. In the U.S., Sectra was considered in half of all reviewed PCS procurements. And remarkably, they were chosen in half of those instances where they were considered.
So a 50% win rate when considered?
Effectively, yes, which resulted in an overall win rate of over 25% of all decisions reviewed. KLAS explicitly states that's significantly more than any other supplier. This isn't just holding their own. It's consistent, quantifiable market leadership in new deals.
And it sounds like it's not just Sectra being good, but maybe some of the giants are dropping the ball, showing some weaknesses.
Indeed, it's very much a two-sided coin. Sectra has been brilliant at exploiting opportunities created by incumbent weaknesses. The KLAS reports point to specific vulnerabilities.
Like what?
For example, GE Healthcare, despite its size, is noted as having a large but most vulnerable customer base. Many clients reportedly planning to leave, citing disengaged relationships, poor support, common complaints about big companies sometimes.
Interesting.
Similarly, Philips has apparently faced real challenges migrating customers from their older IntelliSpace PCS to their newer View PCS platform. Many customers, instead of migrating, are reportedly just choosing other vendors entirely.
So market churn, people leaving the big guys.
Exactly. This churn, driven by dissatisfaction, creates fertile ground for a vendor like Sectra, known for excellent customer satisfaction and service. They've capitalized brilliantly.
So what exactly is this economic moat? What allows them to compete so effectively and lock customers in?
It's built on several key pillars working together. But the absolute bedrock, the most critical element, is their unparalleled customer satisfaction and loyalty.
Unparalleled. That's a strong claim.
It is, but it's backed by incredibly robust third-party data, which is key. For an astonishing 12 consecutive years, Sectra has won Best in KLAS for their USPTS solution.
12 years in a row.
12 years. That's based on thousands of direct, impartial interviews KLAS does with healthcare professionals. Imagine the consistent quality and service needed for that. It's almost unheard of.
That's incredible consistency.
And it gets better. A KLAS survey found that 100% of Sectra's major U.S. hospital customers said they would buy from the company again.
100%.
100%. A level of loyalty KLAS said competitors were not even close to reaching. And the financial result, an extremely low recurring revenue churn rate. Just 0.6% in fiscal year 24-25. Their customers just don't leave.
Okay, customers absolutely love them. But still, can a big competitor just come in with a super aggressive price or some flashy new feature and pull them away? What really stops them switching, even if they're happy?
That's where high switching costs come in. It's a huge, often invisible part of their moat.
Right. It's hard to change systems.
Incredibly hard. A PASS or VNA isn't like switching your email provider. It's a mission-critical clinical system, deeply woven into the hospital's entire diagnostic workflow.
Integrated with everything else.
Exactly. The electronic health record, EHR, the MRI and CT scanners, recording systems, even billing. Replacing it is massively disruptive, costly, resource-intensive. It can take years. Years to plan and execute. You have to migrate enormous archives of patient data, petabytes, sometimes with strict compliance rules. You have to retrain hundreds of clinicians, radiologists, techs, referring docs on a whole new system, ensure seamless integration.
It sounds like changing the hospital's central nervous system.
That's a perfect analogy. It's a multi-year, multi-million-dollar undertaking that directly impacts patient care. So for a hospital that's highly satisfied with their current system and vendor support, the incentive to undertake that massive risk and expense is incredibly low.
The disruption isn't worth it.
Usually not. It effectively locks in Sectra's happy customer base.
That makes a lot of sense. And their dual engine structure, the focus and security background that plays into the moat too, right?
Absolutely. Powerfully reinforces it. Think about the conglomerates, GE, Siemens. They have to divide R&D budgets, strategic focus, across this vast portfolio. Big imaging machines, diagnostic services. Potentially. Sectra, meanwhile, maintains this singular laser focus, be the absolute best in enterprise imaging software. This allows a deeper understanding of clinical workflows, more agility in development. They can react faster, innovate more effectively in their niche.
And the security heritage.
As we discussed, it's a huge differentiator for hospital IT departments. Data security is top priority for them, especially with HIPAA and the threat of breaches. Sectra's background in securing classified government data gives them an inherent trust advantage that's incredibly hard for others to replicate. It's foundational competence.
So we've seen how Sectra operates, how they're adapting their model, building this moat, but, the proof is in the pudding, or maybe the financials here. How does this translate into actual numbers? Let's dig into their financial performance.
Yes, the crucial question. And the picture from our sources is one of consistent growth, strong profitability. But with that important caveat, you need to know which numbers to focus on.
Because of the SaaS transition?
Exactly.
Yeah.
The reported financials are solid, but understanding the SaaS impact is key to seeing the true underlying strength. Got to look beneath the surface.
What's the overall trend been like financially for Sectra over, say, the last 5 years?
Historically, it's been really robust growth. Our sources show net sales grew at an impressive 15.6% compound annual growth rate, CAGR, between FY 19-20 and FY 23-24.
So strong average yearly growth?
Very strong. From SEK 1,661 million to SEK 2,963 million. And importantly, this growth has been largely organic, driven by winning market share, not just big acquisitions.
And profitability. Have they managed to stay profitable while growing?
Profitability has been a consistent hallmark. They've regularly maintained an operating EBIT margin above their stated goal of 15%.
EBIT, earnings before interest and taxes. core profitability.
Right. Over the last 5 years, it ranged from 17.5% in FY24 up to 21.4% back in FY21. Now, you might notice that slight dip to 17.5% more recently.
Yeah, a bit lower.
That's not operational weakness. It's a direct expected consequence of that strategic shift to SaaS. Remember, deferred revenue recognition, upfront investment costs, it temporarily pressures the reported margin.
Short-term pressure for long-term gain again.
Exactly. It's a cost of building that higher quality revenue base.
So to really understand what's happening now, with the SaaS transition in full swing, we need to look beyond recorded sales and profit. What are the better forward-looking metrics?
Precisely. When a company's shifting its model like this, the best indicator of future growth and momentum is their order bookings.
The total value of new contracts signed.
Exactly. And this has been exceptionally strong for Sectra. Really signals huge future revenue. For the full fiscal year 2024-2025, contracted order bookings hit a record SEK 8,706.1 million.
Whoa, 8.7 billion krone.
Yeah, that's a massive 39.9% increase over the prior year's already strong result. This huge influx of new business gives them incredible visibility into future revenue streams over the coming years. It's a powerful leading indicator, even if it doesn't hit the income statement right away.
That's a massive pipeline. And what about that recurring revenue we talked about, especially the cloud recurring revenue, the CRR? How's that tracking?
That's the other vital metric.
Yeah.
Arguably the most important one for judging the success of the strategic shift. And the numbers are really compelling.
Good growth there.
Excellent growth. Total recurring revenue grew 19.9% in FY25, reaching SEK 2,067.4 million. It's now 63.8% of total net sales, showing that clear shift. But within that, the most critical part, cloud recurring revenue, CR, is growing even faster, up 48.9% in FY25.
Almost 50% growth in CRR.
And it was 55.9% the year before. This accelerating growth in high-quality, predictable revenue is the core financial objective of the strategy. And they're clearly executing on it.
I also saw a note about a one-time patent settlement in the latest results. That affected the profit numbers, right? Important not to miss that.
Good catch. Absolutely crucial for accurately reading their recent profitability. Yes, the reported operating profit for FY25 was significantly boosted by a one-time patent settlement of SEK 110.0 million.
Okay.
So while that pushed reported EBIT up to SEK 723.0 million, the underlying operational EBIT, excluding that one-off gain, was SEK 613.0 million.
So the real operational profit was lower, but still growing.
Still strong underlying growth, yes. That adjusted figure represents 18.4% growth over the prior year, giving an adjusted operating margin of 18.9%. That adjusted number is a much better reflection of the core business's ongoing profitability. Shows the underlying health.
Beyond profit and revenue, what about cash flow? And the balance sheet, how's their overall financial health looking?
They exhibit really strong cash generation. Net cash flow from operations has been consistently positive. It was SEK 922.4 million in FY25. Now, this figure can bounce around year to year due to timing of big payments.
Like advance payments on large projects.
Exactly. But the overall trend is robust, shows a healthy operational business, and their balance sheet, it's exceptionally strong, almost pristine, really.
Low debt.
Minimal total debt. Around SEK 9.1 million as of April 2025. Basically negligible leverage. This gives them huge financial flexibility. They can fund growth, R&D, entirely from internal cash flow. No need to borrow heavily.
And it makes them resilient.
Very resilient. Well-positioned to handle economic downturns without financial stress. They consistently exceed their policy of keeping an equity-to-assets ratio above 30%. Shows very conservative, prudent financial management.
So we've seen their current strength, the smart SaaS move. What's the long-term plan? Where do they go from here to keep this momentum going?
Their growth strategy is pretty clear. It centers on leveraging that incredibly strong position they have in radiology as a foundation.
Build from the core.
Exactly. From there, strategically expand into adjacent clinical areas, push into new geographies, and all the while keep deepening those customer relationships through the service-based model.
Moving beyond radiology, we talked about pathology and genomics. Those are key planks.
Very key planks. They're actively building that comprehensive enterprise imaging platform. Digital pathology is a primary focus. They're winning contracts, establishing a strong foothold in that rapidly growing market, and genomics IT is the next frontier.
The integrated diagnostics vision.
Right. Creating that unique platform for cancer care, combining imaging and molecular data. This strategy is smart. It expands their addressable market, sure, but it also strengthens their moat by offering a more holistic, integrated solution than competitors with fragmented systems might have.
And geographically, where are the key growth markets for them?
While they sell globally, there's still significant room for deeper penetration. The United States has become their largest and fastest growing market. With that high win rate, continued share gains there seem likely.
Okay.
The UK has also become huge for them, actually surpassed Sweden in sales for the imaging IT segment now.
Bigger than their home market. Interesting.
Yeah, shows the importance and growth there. So continued expansion in these large developed markets plus other regions remains a key growth driver, methodical expansion.
And the SaaS model, Sectra 1, how does that fit into the growth strategy beyond just the financials?
Oh, absolutely. It's a strategic growth driver itself. It deepens their competitive advantage. By moving customers to these long-term service-based relationships, Sectra increases customer lifetime value.
More predictable revenue over longer periods?
Exactly. And it naturally creates more opportunities to upsell additional modules, new features, ongoing services over the contract term. The relationship becomes more collaborative.
Less transactional.
Right. And that incredibly low churn rate, 0.6%, is direct proof this strategy works. It retains customers and allows expansion within that base, creates a powerful flywheel effect.
With all these growth plans, how do they manage their money? What's their approach to capital allocation?
Management seems very disciplined and consistent here. The number one priority is organic growth through innovation. They consistently reinvest a significant chunk of sales back into R&D.
Research and development.
Right, to enhance existing products, develop new solutions like that genomics module. For instance, back in FY 1920, they reinvested 12.4% of sales into R&D. Shows a strong commitment to staying ahead technologically.
Are they active in M&A, buying other companies?
Their M&A strategy is quite distinct. It's characterized by small, strategic, tuck-in acquisitions, not big, transformative, potentially risky deals.
Tuck-ins, meaning?
Meaning they acquire smaller firms specifically to get access to a particular technology or to bolster their position in a niche market segment, like buying Burn Bank in the UK in 2012 for image exchange tech, or RXI in 2015 for cloud remote viewing.
So targeted acquisitions, not empire building.
Exactly. It's a cautious, focused approach.
Yeah.
Avoids the huge integration risks and potential value destruction of large-scale M&A, smart capital deployment.
And for shareholders, how do they balance investing for growth with returning capital?
They have a consistent policy of returning capital, which shows financial discipline and strong cash generation. The policy aims for a stable, favorable dividend while always keeping that equity-to-assets ratio above 30%.
Right, maintaining financial strength.
In recent years, they've often used share redemption programs instead of traditional cash dividends. It's a flexible way to return capital. For FY 23-24, they distributed SEK 1.0 per share that way.
And for the latest year?
Following a strong year-high cash flow, that one-off patent settlement, the board proposed a more generous total distribution of SEK 2.0 per share for FY 24-25. That's an ordinary dividend of 1 NIS plus an extra 1.00. Shows a commitment to rewarding shareholders alongside growth.
Who's leading the charge at Sectra? Does the leadership reflect this long-term focused strategy we've discussed?
The leadership team is really characterized by long tenure, deep technical expertise, and significant insider ownership. That creates strong alignment with long-term shareholders.
They're still involved?
Very much so. The co-founders, Torbjörn Kronander, the president and CEO, and Jan-Olaf Brewer, the chairman of the board, both have PhDs in technology. They're still in top positions. Been there since the 80s.
Wow, real stability.
Dr. Kronander's been CEO since 2012, overseeing this international expansion and focus on customer satisfaction. Together, he and Mr. Brewer control a significant chunk of the voting rights. This stability has fostered a strong, consistent corporate culture, which Sectra often credits for its success.
And the corporate governance structure, how is it set up?
Well, Sectra is a public Swedish limited liability company listed on Nasdaq Stockholm. They adhere rigorously to the Swedish corporate governance code.
Okay.
The structure has clear divisions of responsibility shareholders via the AGM, the board, the president, CEO. The board has 7 elected members plus 2 employee reps. They've set up an audit committee for financial oversight and a remuneration committee for executive pay.
Standard practice for listed companies.
Pretty standard, yes. Executive pay includes fixed salary, variable cash tied to performance, and interestingly, that includes both financial and non-financial goals, like customer satisfaction.
Tying pay to happy customers.
And they have long-term incentive programs. A unique aspect is their policy that all employees, regardless of position, are eligible for the same nominal remuneration under these long-term programs. Reinforces that shared purpose.
Okay, we've covered a huge amount. The business, the strategy, financials, governance. Let's try to bring it all together. What's the ultimate bull case for Sectra? Why might they continue to thrive? And then the bear case, what are the biggest risks?
Right. Synthesizing it all, understanding the potential upside and the key risks you need to watch. It's about seeing that balance.
So that incredible customer loyalty, that's the absolute foundation of the bull case.
Absolutely. It's the bedrock. 12 years as #1 for customer satisfaction in U.S. Pass Yes isn't just an award. It is the foundation of a powerful, durable economic moat.
Right.
This reputation translates directly into industry-leading retention, that 0.6% churn, and that superior win rate in new deals. In a market with lots of aging systems needing replacement, Sectra is perfectly positioned to benefit from that churn, taking share from less loved competitors.
And the SaaS shift, despite the short-term accounting noise, is ultimately a huge positive for the bull case long-term.
Yes, emphatically. They're successfully navigating this complex shift. The rapid growth in high-quality cloud recurring revenue is systematically building that predictable long-term revenue stream. Over time, that should lead to higher, more stable margins.
And the order backlog.
That record-breaking order backlog provides a long runway for future growth. Remember, the current reported financials mask the underlying strength. The backlog gives huge revenue visibility.
And the expansion into pathology and genomics, is that a real driver or more speculative?
It's a significant driver, definitely part of the bull case, not just speculative. By extending their single platform into these high-growth areas, they're increasing their addressable market and creating a stickier, more integrated offering.
Harder for customers to leave.
Exactly.
Yeah.
That focus on integrated diagnostics for diseases like cancer aligns perfectly with where healthcare is going. It further differentiates them from competitors with maybe less cohesive product sets.
And finally, that solid financial base. The balance sheet, cash flow, aligned management that supports the bull case too.
Absolutely. The pristine balance sheet, strong cash flow, the founder-led management with significant skin in the game. It provides a rock-solid foundation, critical for executing a long-term strategy, funding innovation, and weathering any economic storms. Reduces risk.
Okay, that's a compelling bull case. But let's look at the flip side. The bear case. What could go wrong? You mentioned the giants. What if they wake up?
That's a major competitive risk. Can't ignore it. GE Healthcare, Siemens Healthineers, Philips. They have immense scale, huge R&D budgets, vast existing customer relationships.
Right.
While Sectra thrives on quality and service, there's always the risk one or more of these giants decides to get aggressive. Maybe with pricing, maybe bundling deals hospitals find hard to refuse, maybe a breakthrough AI tech.
That could slow Sectra down?
Could definitely slow their market share gains, maybe compress margins. It's a constant background threat you have to acknowledge.
Are there risks in the SaaS transition itself? Execution risks? Could it be harder or more costly than planned?
Yes, definitely. The strategy is sound, but executing carries risks. Scaling cloud infrastructure, managing complex data migrations for huge hospitals, supporting large deployments. These could prove more expensive or take longer than anticipated.
Leading to margin pressure.
Could lead to a longer period of margin pressure than expected. Management is actually guided that major customer go-lives in the coming year will weigh on profitability due to those upfront costs. It's a balancing act.
What about valuation? Sectra stock often trades at a premium. Is that a risk?
It's a critical consideration, yes. Sectra often trades at a significant premium compared to its peers.
Higher valuation multiples.
Right. Now, you can argue that premium is justified by their superior growth, quality, strong moat, but it leaves very little room for error.
High expectations baked in.
Exactly. Any stumble in execution, any unexpected slowdown, could lead to a sharp derating of those valuation multiples. A great company isn't always a great investment if the price is too high.
And broader economic risks. Could a global recession hurt them?
Yes, macroeconomic headwinds are always a potential risk. A severe global recession could squeeze healthcare budgets. Hospitals might delay or scale back big IT investments, like enterprise imaging projects.
Even if it's important.
While a lot of healthcare spending is non-discretionary, large capital projects can be deferred in tough times. That would hit Sectra's order intake and growth. No company is totally immune.
So, balancing those bulls and bears, what are the key things to watch for in the near term, say the next 12, 18 months? Key catalysts.
Okay, near-term things to watch. Definitely major contract announcements. Big health systems, especially in the US or UK, signing on would validate the growth story, boost the backlog.
Keep an eye on the deals.
Yeah. Also, quarterly earnings reports. Specifically, watch for continued strong growth in order bookings and that crucial cloud recurring revenue. That reinforces the SaaS transition success.
And the KLAS report.
And the annual Best in KLAS report, usually out in February. If Sectra keeps that #1 spot, it reaffirms that core competitive advantage, a big validation point each year.
So it sounds like this isn't really a short-term play. It requires patience to see the full story unfold.
No, absolutely not short-term. The whole investment thesis here is fundamentally long-term. It's based on the belief that this strategic shift to recurring revenue will ultimately build a larger, more profitable, more stable business.
But it takes time for that to show up fully.
Exactly. The full financial benefits of that massive order backlog they've built will only really become apparent in the income statement over several years as revenue gets recognized incrementally. Patience and a long-term view are key.
So as we wrap up this deep dive on Sectra AB, it's really clear we've looked at a company that's, well, a masterclass in focused innovation, unwavering customer loyalty, proving a David can absolutely lead against industry Goliaths.
It's a powerful illustration, isn't it? How a really well-executed strategy, especially one built on those deep customer relationships and the willingness to evolve the business model like they have, can yield impressive, sustainable results, even in a complex, critical industry like healthcare IT.
It really makes you wonder, though, in this era of rapid tech change, huge competition, constant disruption, how much does that unwavering, almost fanatical customer satisfaction truly matter as a long-term competitive edge? Is it enough to keep the giants at bay indefinitely, or does disruption always win in the end?
That's a really important question for you to ponder. Think about how companies build lasting value. Is it just about being the biggest, having the deepest pockets, or is it about being the absolute best, most trusted partner for your customers? What really stands out to you in Sectra's story about building a durable advantage? It's a fascinating balance to consider and a critical lens for looking at any company in a dynamic market today.